Well, I think there are two things going on in the UK market. First and foremost, obviously sterling has been materially weak and continues to be against the dollar. And for the UK stock market, with so many big multinationals, companies that report in dollars, you're automatically getting those upgrades to profit expectations. So this is partly why the UK is doing so well. If you express the FTSE in dollar terms, we're not doing so well. Yeah. And the second thing really is the big consequences of both Brexit and Trump last year are that people have voted for change. They voted for an end to the kind of monetary policies we've seen post-financial crisis, very negligible or negative interest rates. They voted for, fiscal stimulus, Trump coming in, going to try and target higher levels of growth. So the bond market is on the slide. So after this great 35-year bond bull market, it's finally beginning to sell off. And the markets are going, well, faster growth, that could be good news. We could have a little bit of Goldilocks where inflation doesn't really pick up for a while and yet equities benefit from stronger growth.
So it's the so-called reflation trade rather than outright inflation. I mean, we can look at the FTSE here. I mean, it's since the referendum, stunning recovery. As you say, though, in dollar terms, that picture would be completely flat, wouldn't it?
It would. It would. So, sadly, when you go abroad, we are poorer as a nation as a result of the weakness of sterling. But yes, it's very good news for many of our big multinational companies.
I mean, you mentioned sterling dollar. We can have a look at that one today. I mean, sterling today was flirting with new two-month lows against the dollar. I mean, presumably that's why the FTSE's up again. There's an automatic rally in the FTSE every time sterling goes like this.
It's absolutely correct. And I suspect that, sadly, sterling is going to continue to be the safety valve for the UK economy because of our twin deficits. It's really the only thing that can help the economy if it is weaker through the course of this year.
But what about company earnings, Richard? I mean, share prices, they're a function of earnings expectations. The FTSE is trading at relatively high historic ratings. Are those earnings going to come through?
Well, I think for these big dollar-sensitive stocks, you are getting the upgrades to earnings expectations purely on currency basis. So I think you're pretty safe there. Clearly, as we've just heard, the issue for some of the more domestic names, UK retailers, Next, prime case in point. This is where people are still concerned you haven't seen the last downgrade. But commensurately, that's where the shares have already derated very, very strongly. So it could be that there's some moment during the course of this year when you've got to start, holding your nose and plunging into buying some of these more domestic names.
Big call for investors like you then. What about the US? A lot of expectations. You mentioned it yourself. Trump equals growth. Is that necessarily going to happen?
I think this could be a year where there's a lot of travelling and arriving, and I think the euphoria about the first 100 days and so on, and the markets I think will continue to rally through that. And then there'll be perhaps a little bit of, well, actually, is it coming through, or is the strength of the dollar actually taking the shine off US corporate profits, the flip side of what we're seeing here? Will the derating of equities, if bond yields keep rising, start to become a feature? It wouldn't surprise me if at some stage next year, during the course of this year, you had a surprisingly positive wage inflation number coming out of the US, because it's running at 3% already. And if he's going to pour more fuel onto a pretty full employment situation anyway. So lots of things where I think, markets could run through to Easter, but then it could be a lot stickier in the kind of subsequent months.
Very, very brief word on the Eurozone, Richard. Is there going to be any car crashes there this year?
No, I think that in contrast to many people, the elections throughout Europe this year will produce absolutely nothing in terms of dramatic change. This is not the year that the euro is going to have any major existential crisis. I think the German economy, the consumer could actually surprise on the positive side this year.